Alright, so in today's video, we are going to talk about a breaker block. Now, what is a breaker block? A breaker block is basically an order block that has not been respected and that price go through, and then when it retraces, it becomes a breaker block. Normally, when price comes back to this breaker block, you will see some sort of reaction. Alright, so let's say you have price moving like this and just a normal structure. So what happens, let's say for example this push here, so we want a market structure shift to happen. Alright, so let's say for example we have an order block here that created this new high, then price comes back. So instead of bouncing off this, price breaks through and we have a respect from the breaker block and continue down. So what happens if price does something like this? So now we broke this high, price creates an order block again, price does not respect it, and what happens is a breaker block is being created, and then price reacts from this breaker block and vice versa. So to make it easier for you, let's say we have candle 1, let's just say this is a trend going up and then a trend coming down. So let's say this is going to be your order block. Just change the color. This is going to be your order block, and now price breaks through this order block, does not respect it, and then what we want to see is price retrace to this breaker block, and then we have a big reaction pushing the opposite way. So it's basically an order block that has not been respected. It turns into a breaker block, and then price retrace to the breaker block and we have a reaction. Alright, so that's the basics of a breaker block. Let's go to the charts and I'll show you some examples, and also make sure you stay to the end of the video because I'm going to show you a tool that can make this 10 times easier for you. Alright, so let's get to the charts. Alright, so let's look at this chart example here. You can see price had a huge move down. Price reacted from this zone right over here. So let's quickly have a look. If you take this order block, I'm just going to take the full zone. Change the color. We're going to take the full zone. This is an order block. Price went up. Price did not respect this order block. It broke through. And if you extend it, you can clearly see price break through this order block. And this becomes like a type of support and resistance zone. So price breaks through, retest, and it comes back down. Same with here. You can see this order block here created a nice internal high. So what most people are waiting for, they're waiting for price to retrace, and their target is going to be this high here. But you need to look at the overall move. So that's where a lot of people make mistakes. They don't look at market structure. Clearly we are in a downward trend on this piece of price chart here. And then price doesn't take it out, but they're still expecting for price to continue higher. And then what happens? Price comes back. It disrespects this order block right over here, and it becomes a breaker block zone. As you can see, price broke through, played around a little bit, consolidated inside of this zone, and then again we broke through. Exactly here. If you don't look at market structure, you will see here liquidity has been swept. We had a market structure shift. We're waiting for price to go up. So what do people do? They wait for this order block, a reaction all the way to the up move, but price disrespects this order block. It turns into a breaker block, and as you can see, we had a nice rejection from this breaker block and we had a push down. Let's look at more examples. You can even see here, this is a nice support zone when you drag this out. But for example, when you look at this piece of price action, we created a low, high, low, high. This order block did not get respected. As you can see, clearly it broke through. So this becomes a breaker block. Same right over here. Order block was created. Price didn't respect it. When you extend it, it becomes a breaker block, and price reacted from there. Same right over here. If you have an order block, price did not respect it, price came back, and we had a breaker block respected and came back right over here. And that is a breaker block, nice and simple. It's an order block that has not been respected, and then for that it turns into a breaker block. Now, it can be difficult seeing these breaker blocks when you do them for the first time. It's going to take time for your eyes to get used to it and identify them on the charts. So I'm going to show you a tool that's going to make this 10 times easier for you. So what you need to do, you need to type in Flux Charts breaker block. Now there's two that I'm going to show you. You are going to get the free version. It's called Volumized Breaker Blocks by Flux Charts. When you go inside, you can see there's a bunch of settings you can play around with. Now what this does, this identify the breaker blocks for you, or the breaker block zones, if you want to put it that way. Now you can see when you scroll back, order block has been created, order block has been created, didn't respect it, price broke through, entered the zone again, came back down. Price broke through, retest, comes back down. Order block here, we're still waiting for price to be there. Order block zone right over here. Price broke through. Here we go, we have a retest. Same right over here. Breaker block zone. Price breakthrough. Retest right over here. So this is a free indicator as well. You can play around a little bit with the settings. So for example, if you lower this, you will see more breaker blocks will start to appear. The lower you make it, the more breaker blocks will start to appear. Here you can see zone count. You can put that on low, for example. And then when we go back, you can see all of this breaker blocks created. But for me, this is a little bit too much of noise. So I personally like to put this a little bit higher, so it shows less breaker blocks, but it makes the chart a little bit more cleaner, if that makes sense. Same with this example. Breaker block was created, broke through, retest, we came down. Breaker block was created right over here, broke through, retest, came down. And then we are here where we are now. So that's the first indicator. This is an absolute free one. If you want a paid one that's a little bit more advanced, you're going to get the Flux Charts Price Action Toolkit. This one has fair value gaps, inverse fair value gaps, breaker blocks, liquidity grabs, order blocks, break of structure, chalk. It has equal highs, equal lows, literally everything that you need in a market structure video. This you got. Alright, so this is the settings. You can see I put my midline on. I also did put it so it doesn't show a lot of breaker blocks. But let's look at these examples really quick. Let's go to this one. So as you can see, this order block was the last order block that broke this high right over here. There we go. It came back, retraced, didn't respect this order block here. It becomes a breaker block. As you can see, it tested our breaker block here, and we had a big push down. Same right over here. Order block was created in this New York session right over here. Didn't respect it. And on the next day, during Asia and London, it respected this breaker block and we moved all the way down. When you look at this one here, during New York session, this order block was created. The next day we had Asia, London, New York. After New York session, we had a big push up. So this order block was not respected. Came back down, and during New York, right over here, you can see price respected this breaker block, and we moved all the way away from it now again. And this is where price is currently at now. So I love breaker blocks. It's an extra confluence you can use as well. So what I like about this, you can't only not trade breaker blocks, you need to have a little bit of confluence as well. So for example, if you draw your fib from the high to the low, you can see this is in the 50% region as well. We have a nice big fair value gap that's overlapping with this breaker block. We had multiple rejection candles right over here. So if I go to the lower time frame, let's say for the 15 minutes, here's that breaker block right over here. And let's even go lower, 5 minutes. And now you can wait for your entry setup. So now you can put extra confluence. So now we know we're in an hour breaker block. We are in the 50% fib level. We have a big push down. What we can wait for is a market structure shift. So here we had our market structure shift with this candle right over here. We had a big push up. We have a inverse fair value gap right over here. We have a 5-minute order block right over here. So how many confluence is that? That's a breaker block, fib level, market structure shift, inverse fair value gap, plus a 5-minute order block. That's 5 confluences for you to take this trade from this zone right over here. So if you enter right over here on the retest, for example, put your stops below, and then you can target, for example, this order block here, or you can target a 1 or 2 risk to reward trade. And there you have a 1 or 2 risk to reward trade. And that's how you catch your entries. Alright, so I hope this video helps. It's nice and simple on how to work with a breaker block. It's an order block that has not been respected and it turns into a breaker block, and you can use this as an extra confluence for your trading. Hope you enjoyed this video. Please leave a like and subscribe, and then I'll see you in the next video.